What's going on, traders? In this video, I'm going to show you guys how to properly identify supply and demand zones in order to help you make more money in your trading. At the end of this video, you guys should be able to identify the proper supply and demand zones on your charts. And make sure to stay tuned for the final tip that I'm giving out at the end of the video. So I've been trading supply and demand since about late 2019. I've been posting weekly Forex forecasts on YouTube for the past 3 years. So if you want to check out my analysis, make sure to hit that subscribe button if you want to check out my analysis before the market comes out. I'm currently swing trading my own account and uploading, like I said, weekly Forex forecasts as well as daily private forecast videos as well. So just a little bit about me. And as you can see, we have an example of a demand zone here and a supply zone here on the screen right now. So try to get familiar with the look of these zones. One thing I want you guys to get familiar with is these big moves as price pushed away from the zone. So the first thing I want to talk to you guys about is what is not supply and demand, like as far as a supply and demand zones. First of all, supply and demand exists on a chart everywhere, but as far as the zones go, we are looking for those large moves away, just like I pointed out back here. So this is an example of what is not supply and demand. Over here, this is actually from a student homework who submitted this as supply. This is not supply. Yes, there is basing, but there's no move away like there is here. And then for demand, over here you had this demand zone here, and this is not demand. You can notice there's not even really basing and there's no move away. The actual demand on this chart over here is actually right down here. You can see this very large move away like that, and that is the demand zone down there because of this large move. So you can see here we are not looking for small moves like that. We are looking for large moves away. This is an example of what to look for first. So let's say you're opening up a chart and you're trying to identify supply and demand zones. What are you going to look for first? Well, you're going to look for these large rallies up for demand, and you're going to look for these large rallies down for supply. That is what you should be doing at first. Now, not every zone is going to look exactly like this. You're not always going to get these amazing moves away, but this is what you should be looking for, definitely for starters. These are going to be your better zones when you get these very, very large moves away. And when you open up your price chart, look for these large moves away, and then you have to identify the basing. Here's a couple examples of some zones where you can clearly see these large moves away for demand here, and these large moves away for supply. Compare that to back here where, yeah, there's basing, but there's really no move away, and there's basing, there's not really a move away either, where, like I said, the demand was actually down there. So to go back to here, you can clearly see good basing and a nice move away, a return, beautiful setup off of that demand zone. And then obviously for supply, by the way, guys, everything I say about demand also applies for supply. It is just completely inverse. So anything I say about supply also applies to demand. So same thing for supply over here, where we had that nice move away, a pullback to the supply zone, our entry, and price pushed down. Also notice, guys, a lot of the times with supply and demand is a very, very powerful trading strategy where you can see that we barely hit the zone and price immediately took off. That is one of the best things about trading supply and demand. So if you're new to trading supply and demand, it's definitely one of the things that is probably going to surprise you as you start to trade supply and demand. These are the two types of zones that you are going to find on a chart. Remember, so these are two demand zones. The same thing applies, but just reverse for supply. So for the two types of zones, we have one, the drop base rally. And what that is, here you can clearly see with my laser pointer here, we had the price drop, we based out, we went sideways for 1, 2, 3 candles, and then we had that very, very nice rally, and that is our demand zone right there. We then draw our lines around the zone. And obviously we had the return here, but we don't have to get the return in order for it to be demand. As soon as we had that base and that rally, it became a demand zone right there. So that is an example of a drop base rally. To summarize again, we have a drop in price, a base, and a rally. And then over here on the right, we have a rally base rally. And it's very, very similar, but on this side, instead of a drop, we have a rally, a base, and a rally. There's actually two examples here, and another rally, base, and another rally right there. And these two examples are one candle basing and one candle basing. It doesn't have to be one candle basing. It could be 3 candles like over here, but one candle basing are pretty good zones. So that is something I'm looking for rally, base, rally. So these are the two types of zones on a price chart. And like I said, guys, for supply, it is the same thing, but reverse. Right here, this is an example of a drop base drop supply zone right there, which would be equivalent to a rally base rally demand zone. So those are the two types of zones, guys. Remember, if you have any questions at all, do not hesitate to leave a comment down below. I respond to all comments, so please leave a comment. I will respond to every single one if you guys have any questions. So now we're going to talk about identifying the basing, which is probably one of the most important factors. First, remember, we need to identify that big rally up or down, but then we have to draw our zone. And in order to draw the zone, we have to identify what the basing is. And here's an example. There's only 7 examples here, guys, but remember, there's going to be a lot of different types of zones, and you guys are just have to just experience all of them. But here's a good amount of examples here where we have, right here, we have 1, 2, 3 little doji candles before that move away. Right here for demand, we have our rally base, rally demand zone, single candle demand zone right there, another single candle rally base, rally demand zone right there. Right here, we have a supply zone with 3 nice tight little 50% candles right there, that nice little basing before the move down. And notice, guys, you can see the basing that I'm having is always before that big move. You can clearly see after the basing, there's always a big red or green candle. So here's another example of a single candle basing candle before the move away. This is an example of one that's not a 50% candle. You can see here we have a 50% candle right there and right here, but on this one we don't. It's a very hard to notice basing candle, I would say, but that comes more with the eye. This is more of an advanced demand zone in my opinion. And I will be doing a video soon on 50% candles, so stay tuned for that as well. And over here we have an example of a drop base drop 50% candle, almost a doji candle supply zone. And over here, another looking type of demand zone. Remember, guys, like I said, these are just 7 examples that I found for the sake of the video. But remember, there's going to be a lot of other examples. You're going to have to get out there and just experience looking for supply and demand zones. So here we have an example of a real trade that we took on oil on the H1 chart. It's an H1 demand zone from January 17th, 2024. You can see here, the bottom left of the screen, we had a pretty much a drop base rally demand zone. Price went really far, and we basically just set our limit order here with a stop loss below and our take profit above. We usually like to target around 3-to-1 to 5-to-1 on these trades, at least for the trades from the daily market breakdown video. So basically what we do is once the zone is formed and it meets the criteria for entry, we simply just set a limit order at the zone. So at about $70.80 here, we set our limit order with a stop loss below, a little bit below $70.40. And like I said, our take profit, you guys are going to have to test your own take profit either at 3-to-1 or 5-to-1. You can look for 2-to-1s, 1-to-1s. You know, I personally prefer a higher take profit. You could have even targeted opposing supply at $74.16 up here. And here's me calling out this trade from the daily market breakdown video. This is kind of the middle, you know, some people call it fair value, I think, or whatever. And you know, that's the middle. This is supply, this is demand. So we're just looking to kind of play that. So, and I still think that this. So that was me calling out the trade from the daily market breakdown video. If you guys do want access to my daily analysis, Sunday live stream forecast, Sunday Zoom meeting, and video lessons, and much more, check out the Diamond membership. Links in the description down below. Like I said, my daily analysis is one of the most important things. That's where that video was from. So if you want access to that, check it out. Links in the description down below. We're happy to see all serious traders join the team. We're always looking for, you know, new members. So we're all looking to learn. That's a great community. So we'll be happy to see you guys join the team. So for my final tip, I get this question a lot in my Instagram DMs. Sometimes I got one on Twitter the other day as well. How do I get a sniper entry? I've seen that so many times. I've seen plenty of videos on it. You know, me personally, you can do this. It definitely works. I'm going to show you exactly what I would do. We actually got one the other day. This is from Meta, what Facebook is now called. But this is a real example from Meta from the Sunday market forecast, what I just mentioned, where we are using multiple time frame analysis to find zones within higher time frame zones. So for this example here, you can see we had an H4 time frame here and an H1 time frame. You can see we had a nice rally base rally demand zone right here on the H4 chart, and right here we had it was pretty much a rally base rally demand zone on the H1 chart. Now I didn't display here, but I will tell you guys this H1 demand zone was embedded inside of this H4 demand zone, which means that this isn't basically a sniper entry essentially. But if you guys notice where price went on the H4 chart, it went 4 to 1. You can see down here the risk reward 4 to 1, about 4 to 1 to where price was on the H4 chart. And look, I'll be the first one to say, if you're trading a risk reward that's a 1 to 4, you risked 1% to make 4%. That is a very, very good risk to reward, and you should be very, very happy with that. I'm not saying that there's anything wrong with that, but if you look over here, if you would have narrowed down your entry on a lower time frame within that higher time frame demand on the H1 chart, you can notice we got over an 8 to 1. You can see here risk to reward ratio 8 to 1. And that's simply by identifying an H1 demand zone inside of an H4 demand zone. You can do this with multiple different time frames as well, guys. It does not have to be H4 to H1. It can be H4 to maybe 15-minute chart or the 5-minute chart. What you don't want to do, guys, is go from like a monthly chart to a 1-minute chart. You guys know what I mean? Like, you don't want to go too crazy. You know, you want to stick relatively close. Remember, the more crazy you get, so let's say you do go from like a monthly chart to a 5-minute chart, that's going to just increase your risk of getting stopped out, because it's not any moves to the upside on a 1-minute chart with a monthly downtrend, not going to be the highest odds situation, right? But for this situation, from the H4 to the H1, you can clearly see the risk to reward essentially doubled. Just by going from an H4 to an H1. So you don't really even have to go down, you know, that much crazier. Yeah, you could go from an H4, you know, down to maybe a 1-minute chart and really get a refined entry. But I'm just saying, just from going from an H4 down to an H1, we managed to basically double the reward that we got. And here's me calling out this trade as well from the Sunday market forecast. So any pullback to any one of these 1 hour zones could be good at 371.41. Or a little bit lower at 359. And the reason I show you guys these clips is because I just want to show you guys that this analysis is taking place ahead of time. So that's going to wrap up the video, guys. Remember, any questions at all about this video, do not hesitate to leave a comment down below. Remember, the membership is open to anybody who wants it, and if you don't want it, just check out the free weekly Forex forecast on YouTube and my free trading tips playlist if you want to watch more of my videos. I have a lot of good free trading tips here on YouTube for you guys to watch. So make sure you guys are at least checking those out after this video. So anyways, guys, take care. Enjoy the rest of your day, and I'll see you in the next video.